You know, we're going to want the general contractor's Class A license
Okay.
for whatever jurisdiction they're
Okay.
in. We're going to want their insurance. We're going to want their resume. We don't collect tax returns anymore because you know, it's become too intrusive. So we rely on the consumer to really do their due diligence and go from there. I mean, we're partners with the consumer, and we expect them to do some work.
So can you make the process easier for them by recommending their builders? Do you have a certain number of builders that you work with that, you know, do you check the financial assets, make sure they're not in jeopardy of claiming bankruptcy, things of that nature?
We have builders that we work with currently and in the past, and you know, the builders that are left right now are pretty solid citizens. I mean, they're not the fly-by-night. If somebody's already got a builder and is already working with a builder, we don't try to interfere and push that builder out for one of ours. We're absolutely.
Were you guys actually looking at that builder's history?
Well, I actually personally drive by some of their projects. We just closed a tear down in Falls Church. Tear down being when they're going to tear down the property that was built 70 years ago and build their own home. And the builder had built a couple times 3 homes in Vienna in the past year and a half. And, you know, I was familiar with it enough. It was our first time working with him, so I drove by just to take some pictures of the home, just to put in the file to make sure that our loan committee, you know, the person who approves our loan, saw that, you know, type of work he was doing. And of course, they have websites, and you know, most builders have websites with accolades and references. So, yeah, we do some due diligence.
In the event that the buyer wants their own builder, do they have to go through an approval process with your company?
Again,
what are those steps if they do?
We're going to research the builder. We're not going to be intrusive. We're going to make sure that, you know, there's nothing filed in the Better Business Bureau. There's, you know, we're going to do a very overall look. We're not going to do an in-depth look like we used to. Again, we're relying on the consumer. If it's a builder that we never heard of, then the consumer is going to have to be pretty strong. So if it's somebody we work with on a daily basis, we're more lenient.
All right.
It's really a case by case.
What documentation does a builder need to have in place or be able to provide in order to receive approval from you guys?
Well, you keep saying approval. Really, we don't give them a stamp. It's continuously evaluating. I mean, we're looking for.
But you do have the option of saying, look, we don't want. We know about this builder. We're not going to fund this project.
Right, we do that. We've done that before, and we do it not all the time, but we do that. You know, again, we want a clean general contractor's license, and we want the insurance and the resume, and you know. It's a small community out there, so we know most of the players and the builders, and we know who does a great job, who does a good job, and who we're going to have trouble with. So
that could potentially throw a monkey wrench into the process then, is that correct, if the builder doesn't have the correct documentation?
Well, it could, theoretically, but again, we try to do everything up front so that it's not critical, that we're not at a critical stage where they have to take down buy the lot, and we're running out of time. So we try to do everything up front so the consumer, you know, it's a painless process.
So say the builder started the process, he's got his architect, he's contacted the bank. Exactly how long does it take before they have to actually start paying on the construction loan? Is it when the second they buy the lot, or you said they can buy the lot and build the house on one loan? At what point do they start making payments on that process?
Well, they start, if they use our money to acquire the piece of property, the piece of dirt, I mean, however much they borrow to buy that land is how much we're going to start charging them interest. So in a simple example, if they borrow $100,000 from us, part of the construction loan, the first 100 is to buy the lot, and they put down whatever 50. We're going to start charging them interest on that 100,000 the day of settlement.
But you don't charge them for like the lot and the house all at the same time.
No. If their entire project is a loan amount of 500,000 and they only pull 100,000 to buy the lot, we're just going to charge them on that 100. And then as they draw, we have construction draws, as they draw money off that additional 400.
Draws. Explain a construction draw.
A construction draw is we break the loan up into 5, 6, 7, 10 draws. So if we have a $400,000, to use our previous example, loan, and we have 5 draws.
What would each draw be used for? Like one buying the lot, one for electricity, one for plumbing, things of that nature?
Yeah, the initial draw would be to buy the lot. The second draw would be to do the site work, to clear the trees, to do the studies. that we haven't done already, and to dig the foundation, and you'd have the third draw would be to rough in the home, to put the 2x4s up, and you could have then the electrical draw, the plumbing draw. So each
there
builder,
could be a whole bunch of draws involved.
Well,
in
there
this.
could be. We try to keep them manageable, up to 5 or 6 draws. But the rough in draw, each builder has their own schedule, and they kind of put it together to meet the certain project, and we approve it. Generally, we're pretty flexible.
Okay. So how are those first draws amortized? I mean, are they based upon a 15-year fixed, a 30-year fixed? How do they know what schedule to make those payments on, and how much are those payments?
Oh, we'll send them a bill.
Okay.
But it's interest only, so you're only paying interest.
Only, so you don't have to worry about the principal, just paying on the interest.
It doesn't make sense to pay principal when you're just a couple weeks later going to pull some more money. So it's interest only payments based on what we've paid out to the seller of the lot and the builder in the draw schedule.
Okay.
Yeah.
Could it be based on interest on a 30-year fixed?
Well, it's simple interest.
Simple interest.
So there's really no amortization time. It's $100,000 at 5% is $5,000 divided by 12.
All right.
It's pretty simple.
Is there a set amount of time that they have to these draws done, or on drawing schedule?
Completed?
Yeah, or is it flexible?
We like to have the home completed in 12 months. Our construction
12
loans are typically for 12 months. In this atmosphere, if you can't build a home in 12 months and it's under 5,000 square feet, then there's probably something else going on. We do offer
as many draws as they want in that 12 months. Or?
Well, you don't want to have 12 draws. We usually have, depending on the size of the project and the amount of money, we like to have between 5 to 8 draws.
Okay.
So for the larger projects, we realize it might take a year.
Okay.
But again, a lot of the trades, your electrician, your carpenters, your roofers, they're not as busy as they used to be, so they want to work fast, and they're willing to get the work done quickly.
Typically, in the beginning process, the first draw, if you will, what is the amount of down payment required? Is it the amount of down payment on the draw, or is it amount on the whole loan that they're getting, the whole loan they've applied for? How much do they have to come up with in the process, like 5, 10, 20%?
Well, that's a good question. A lot of banks are different, and I can't speak for the other banks. With us, if you're buying a lot for $100,000 and then you're spending $400 to build the house and do the site work, we require 20%. So 20% on the $100,000 is $20,000 down payment, and then another 20 on the $400,000 for what we call sticks, bricks, and site work would be $80,000. So you could theoretically get in for $100,000 out of pocket after all is said and done. Okay.
When can they convert a construction loan into the permanent loan? At what point does that take place?
Well, as far as conversion go to your final loan, your 30-year fixed or your 10-year ARM.
Whichever you previously agreed to.
Yeah, and you can change that agreement up until the day you convert.
Is that right? You can change the program up until the day you convert to the normal program.
Right. If today you decide you're going to go with a 5-year ARM in 8 months when your home's done and something happens with your job and you know you're not going to get transferred and you want a 30-year fixed, we can do that as long as we have adequate, we're notified. But to answer your original question, when your home gets close to completion, the county, the jurisdiction, the county which you're in, will send out their inspector to issue in the old days we called it a RUP, a residential use permit. Now they call it a
COE, certificate of occupancy?
Yeah, occupancy permit.
Okay.
So that generally, when that's issued, that's the indicator that you're ready to lock in your loan and convert it to a fixed rate and go on with your life.
Are interest rates, you hear interest rates in the news nowadays are a big thing. Are they typically higher on construction loans? Are they higher during the draw process, and then once you get to the point of converting, they come down? What's the situation with interest rates?
With interest, our construction loans are interest only, and they're tied to the prime rate, which is currently 3.25%. So when you hear your credit card rates are going up or prime's going up, that's typically when you'll see the rate go up. We have a floor of 5%, so our interest rate, it's been stuck at 5% for the last 3 or 4 years. So in order for that to go up, we'd have to have some substantial rises in the prime rate, which is, that's kind of hooked to the federal funds rate, which what the feds lend to banks overnight, and then the banks adjust their prime rate to their best customers accordingly. So typically it's right around where your 30-year fixed rate is right around where
Okay.
your construction loan will be.
Okay.
And again, it's interest only, so you're not paying principal, you're just servicing the loan with
Okay.
interest payments.
Now, we've talked a lot about construction loans, but you guys also do renovation loans too, correct?
That's correct. We offer the FHA 203K, but we're not going to talk about that because we don't do a lot of them. We have what's called a conventional renovation loan. If somebody owns their property and they've got a lot of equity and they want to pop the top or add rooms, and they have, like I said, equity, we can facilitate that. It's like a construction loan, except for we use the equity in your home to facilitate the down payment. If add-ons, we also, if you're looking to buy a property that's bank owned or that's in really poor shape, a lot of people, you can probably get a good deal on a home that's been sitting vacant for a year or two.
Okay.
Again, we require 20% down payment and then 20% of the renovations.
Okay. We only got a minute left, so I'm going to ask you this last question. Are there programs out there where a builder, or I'm sorry, a buyer can build their own home?
Not really right now, because the banking industry's kind of gotten away from the do-it-yourself or the DIY. We like to have an insured and a builder who's insured and properly licensed building it. As far as the renovation deals go, if it's something that's reasonable, yeah, we'll look into it. If you're going to replace the roof and add a deck, that's probably doable. If you're going to pop the top and add plumbing and electrical,
Pop the top. Explain that real quickly while we're having.
you own a home that's one of those 1950 Ramblers that's one story in a nice neighborhood. You don't want to tear it down, but you don't, and build anew, and you take the roof off, get new trusses, build another story on it, and then you need an architect for sure.
All right. I'd like to thank our guest, Will Jacobs, for being here today. Now, we realize we've just thrown a lot of info at you and that you may have questions. If you'd like to view this program again, please visit my website at markrigney.org. You will see a link to this show on the website. Remember, if you have questions, please email us. Our emails are listed on the screen below, or you can visit our website. We will read and answer some of your questions on our next show. On behalf of my friend and colleague, Will Jacobs, thank you for watching Financial Solutions with Mark Rigney. We will see you next time.